This podcast is for informational purposes only and is not provided as financial, legal, or any other advice. The information is not investment advice or an offer to buy or sell any securities or make any investment. The views expressed by guest speakers are their own, and any reference to third-party products, services, or information does not constitute an endorsement thereof by SNN or its affiliates. SNN expressly disclaims all liability for any individual's use of the information presented in this podcast. My guest on the show today is Wolfgang Kirsch, co-CEO of Shelly Group. It's a publicly traded company. The symbol is SLYG on the Frankfurt exchange. Shelly Group is an asset-light European smart home device designer, manufacturer, and distributor that has developed a smart home platform under the Shelly brand. The company specializes in the design, production, and distribution of smart, innovative, open architecture, high-quality IoT home products, smart home. Its main business is a growing line of products under this brand, Shelly. I was introduced to the Shelly Group by a good friend and colleague, Adi Soglowek. Thank you, Adi. And had the pleasure of seeing co-CEO Wolfgang Kirsch present the company at Ian Cassel's MicroCapClub Leadership Summit in Chicago. At the time, I thought to myself, interesting presentation, but didn't quite understand how the Shelly Group's smart home product was unique and different compared to the swath of smart home products that we have here in the States. This is the reason I love this show, because Wolfgang cleared up my confusion real quick, and we dove deep into how and why the Shelly Group chose this pathway for the products themselves and ultimately marketing to the DIY, the do-it-yourself community. We also discuss their marketing strategy to break into the US market and how the company hopes to achieve its goal of $200 million in revenues by 2026. With that, please enjoy my conversation with Wolfgang Kirsch, co-CEO of Shelly Group. Wolfgang, thank you for joining me today. How are you doing?
Yeah, thanks for having me, Robert.
Absolutely. It's great to have you. So the reason I invited you on is I saw your excellent presentation at the MicroCap Leadership Summit a few weeks ago in Chicago. Thank you, Ian, for having us again. And it was actually not just your presentation, but I believe you were brought there by a good friend of the show who, I actually had to meet with when I got to visit him in Israel, Adi Soglowek. So, I thought it was time to have you on here and do a full, run through of the company and everything for folks that may not have heard Shelly Group before. So with that, my first question that I ask everybody on here is, if you had to describe Shelly Group in one line, how would you do
it? We are making smart home products. That's the easy description. The bit longer one is we are making very good smart home products that are so flexible that no one else can match that. And from the investor side, which can as well be the question, we are a bit strange, because whenever I talk about the key financials to investors, the first thing they say, something's wrong. I mean, where's the mistake? So in one sentence, we are with what we are doing, we are kind of a startup. On the other hand, the company exists 20 years. We never lost money, so we are not a typical company collecting investors' money and then having nice parties and spend a lot for marketing and do some great things, and one day we will make profit. We have never been making losses in the whole time. And if we look to the current financials, we have an equity ratio of 90%, so round about 90%. We are growing 50% roundabout every year as well. This year, after 9 months, we grew 49% versus last year. We have an EBIT margin that is around 25%. And we have 20 million euros cash on our bank account. So we don't need to raise funds. We are really a profitable company, and we have a bright future. We are just at the beginning of our development, and then usually people say that something is wrong, because this is a story that is interesting.
Very cool. All right, so great overview right there. Now let's dig into all the nitty gritty a little bit. So looking back at the history of the company, as you said, the company's been around for 20 years, but correct me if I'm wrong, the first product was launched in 2018. So can you give us a little bit of background on when the company was originally founded and what the original thesis was for its founding?
Yeah. So the company is 20 years old, has been founded in Sofia in Bulgaria by two Bulgarian guys. And the business at that time was software services for telecommunication companies. So for the first telephones, so mobile telephones, smartphones, ringtones, and small video clips, and some nice gadgets, and as well some very, very early day payment apps for banking. So this is what the company did. And then after a while, in 2014, roundabout, the two founders said, okay, we are in Eastern Europe, we are a bit in Asia, we are relatively small. So if we want to play this big game, we have to buy other companies, or we have to sell into something different. And then they had the opportunity to sell the company, or this business, in two pieces, one to a Norwegian company and one to an Asian company. And in this time, so 2014, 15, until today, the company sold kids' watches, so trackers for kids. So that's sold, if you want the Apple Watch for small kids, with a good success as well here in the Eastern European countries. So called Mikey, the brand, and it's a synonym in some of the Balkan countries for having a smartwatch. So people say, I have a Mikey. And this business was always positive, carried the company, and then, as software engineers do, they said, okay, what are we doing now? What is next? And they started to make their own homes smart. So how do you do that? You buy some stuff from the market. If you're a software engineer, you delete the firmware. You write a new firmware on the device. And they said, oh, that's not bad, but the hardware is not good. So they hired a hardware engineer, and then the first Shelly was born, Shelly 1, in 2018. And this product came to the market, was just, again, one single product, and it is so flexible that the smart home enthusiasts, the geeks, started immediately to love it. In Germany, a very fast success. So the German community said, well, it's incredible what you can do with this product. It's really cheap, it's very solid, it's super flexible. And then there was a community formed by itself. So it's not something that the company did, it's something that happened in Germany, that some of the Shelly fans started building a community and writing to each other, what can you do with a Shelly, and you can use it for this and for this and for this. And so that's a community that today has more than 100,000 people. So Shelly has more or less nothing to do with that. And at the same time, there were people coming as well from the German-speaking area, asking if they can buy some products in bigger quantities, because we sold it only via our own web shop. And then they said, okay, if I buy a couple of thousand pieces, can you make me a good price? And then they started selling it on some marketplaces. And like this, the whole thing developed. And that went across the borders. And so we never had huge marketing spends to make the name known. It was just because, I said a couple of times already, products are so flexible. You can even change the software on it. I mean, if you know a bit about Java scripting, we have a library that because the memory on the chip is a bit too small for all the features that we can add. So you can delete something, you can copy in something else, so the device can do more than it did before, or something different than before. And that's what the people like.
That's interesting. You know, I think that was one differentiating factor that I didn't fully understand during the presentation. Is it's almost, you know, when you talk to some of the programming community, you know, amongst them, when it comes to a PC versus like an app, right? Because PC, you can do so much in terms of coding, just everything in terms of software engineering, like it's ideal because of the flexibility, versus an Apple, which is great. The product's great. You know, I'm talking to you on an Apple computer myself. I have an iPhone, all that stuff, but it's not the most flexible in terms of software engineering because there's so much encryption, right? So it almost sounds like your smart home devices, the way that it's been placed in the community, it's like the PC for smart home technology in a sense. Is that kind of how I should be thinking about it?
It's exactly like that. And this has advantages. You know, the Apple world has a lot of advantages because it's a closed shop. You cannot change a lot. You cannot make your own configurations or whatever, but everything works very good with each other. If you are a geek, and here in the company, you can imagine the software engineers, no one has an Apple. Even no one is using Microsoft. They are all on Linux. because they say that's much better. I couldn't even boot a computer with Linux. I have no idea how to do that. So this is one of the flexible things that our product can do. And I mentioned as well in Chicago that we are not forcing people into our environment, so into our application. Our products work with 100, I think in the meantime, it's 130 or 140 different applications. Some of them are not even known. I mean, of course, they are compatible with Alexa and with Google and with Samsung SmartThings, and we work with Apple. They work with Home Assistant, which is a very widespread smart home platform used by a lot of specialists. And it works with 130 or so other applications, some of them in the professional business. Like we have a partner in South America using some of our devices for energy management in McDonald's restaurants. With his own software, but with our devices. So we are super flexible, and this is something that people love.
No, and I think that's a big distinction because, when I first heard the presentation, I'm like, okay, another smart home products, like, okay, like, especially when I think about in the US, like it's a crowded space. I mean, from Alexa, the Ring, Vivint, like I use Vivint at my home, like my home is completely connected with that, so I guess that was my misinterpretation as well when I thought about how Shelly is kind of differentiated from, because right now your primary sales are in Europe, right? So it's not even like you're in the US where you have to deal with that, whole marketing issue yet, right? But assuming that is the plan at some point, like you might have to deal with that. So how do you think about in terms of how you're differentiating? Because I also know that you probably don't want to just market it like for the geeks, right? Like, because that kind of closes you into that niche. You also want to have like an Apple model that is like, okay, it's clean, easy, efficient. So love to hear your thoughts on how you think about all that.
Yeah, so the geeks made us strong and big. And with the geeks, do it yourself, of course. So if you look to our customers, we have today around about 75% do it yourself customers, 25% professional use or professional installers that are installing this, because some of the products, if you want to have, I want to say our signature products, they are connected to 110 or 230 volts. So normally, and we say everyone, if you are not an electrician, be careful, don't touch it. But most of the people are doing that. But it's normal as well. In the US, you can buy all the electrical stuff in a Home Depot store. And a lot of people are installing it themselves. Not everyone is calling an electrician. But we have more and more plug-and-play products. And in the last couple of months, one of our most sold products, or the most highest ranked product on Amazon in Europe, was our smart plug. So that's something that is not for geeks anymore. That's something that everyone can use. And that's one of the entry points into the Shelly smart home environment. Because if you see the quantities that we sell, and if this is the first Shelly that someone has, and then he says, oh, that's great, I add something else, and how can I make my lights smart and do more stuff? So that's really helping. We are as well very close on the technical side with Amazon and Google and with Samsung, but especially with Amazon Alexa. They love our products, the Alexa team, because of they see how many of their customers, of Alexa users, have Shellys in their home. They see how many these Shellys are used, because it's fine if you have something that you use once a day or once every week. They see how many hundreds of thousands of commands are going via Alexa over the Shelly, then doing something. And they see how solid they are. That's what I mean. They see how often they fail, and that's very, very small failure rate. And that all this at a very good price point. So they love us, and we are working on deeper integrations. So one of our ideas is today energy management is a driver for our business as well, because most of the Shellys today are measuring your electricity consumption in real time. This is not. It's possible, but it's not visible over Alexa or over Google. So we are working with them on simple things like, Alexa, how was my energy bill yesterday? And then Alexa says $7.50. Oh, why was it that much? Because your refrigerator is broken or whatever. Because the system as well measures if one of the products has a not normal consumption of energy. So that's kind of the things we are working with those guys. And that's for us as well a driver of business. Amazon is a very important channel, of course, for smart home do-it-yourself. So we are in Europe, we are very, very strong with them, but not cool with them.
So let's talk about the business model a little bit, because, you know, I'm thinking in my head, okay, like obviously there's the hardware sale, right? Like, okay, buy the hardware, done, easy. But then I think because, you know, from words you said yourself, like because of the flexibility of the Shelly and it being able to integrate with all these different applications, like how do you build your follow-up? Because assuming there's a subscription model, right? To keep or maybe not. Explain it to me a little bit.
That's one of the interesting points. There are a lot of smart home companies out there losing money with the hardware. That's why they are making losses. And that's why they every now and then have to collect new investors' money and motivate the investors. And the story is that, you know, we are losing money with our hardware, but one day we will have a subscription model and the customers will love to pay for our app, and then we will make huge profits. We started our subscription model, but without having a subscription model, just selling the hardware at very good prices. So we are not on the very lowest level of cheap Chinese products, but we are half the price of normal smart home products from the competition, from European competition or American competition. We are twice as expensive as the cheap Chinese one. So if our standard relay is 15 euros or $15, the Chinese one is 7 or 8, and the competition's is like 30, 40, sometimes 50 euros. So much more expensive. And still we are making 25% EBIT margin without having this recurring revenue thing. So now we have our app. We have more than 1 million users of our app. And again, we are not forcing customers in the app. The basic version of the app is free and it's good. And then we launched a couple of months ago with a very soft launch. We launched a premium version of the app that is just starting. We have a couple of thousand users in there. We did not make big advertising. We make a really very soft launch. The first 3 months are for free anyhow, so there is no income this year and will be very low income next year. But we asked for €3.99 per month. And then you have additional services in there. And additional service means, as I just said, it gives you a signal when one of your devices is not working in the normal way. The refrigerator normally is on or off, but not the whole day on and not the whole day off, consuming energy. And this, if there is something wrong, the device tells you something is wrong. If you forgot to switch off your light, the device tells you 3 o'clock at night, normally your light is not on. Shall we switch it off? Shall I ask you next time, or automatically switch it off? And there are a couple of a professional weather service that is connected that allows you to see if there's a storm coming without having a wind, wind meter, so that you open the blinds or so protect your things. And so there are a lot of these features in there, and we think that we can get some quite significant recurring revenues. But what I always say, and that's really important, if we are successful with the paid version of the app, this is the icing on the cake. If not, we plan to be on 25% EBIT margin or 25% plus, and we are a profitable company, and we see that we sell more and more expensive products, not the same product, more expensive. So we didn't increase the prices, for example, but with the whole energy energy price development, especially in Europe, we sell a lot of energy meters, high-end energy meters. We sell energy meters to professional users, to companies. We published a couple of weeks ago that we signed a frame contract with Vodafone. They are using one of our devices to measure the electricity consumption in their base stations in Africa. So that's a big volume for us, but even more important is that, you know, they tested the product like crazy. You can imagine that they don't want to have any problem in their base stations. So that shows that the product is really solid. And this is a product for a bit above $100. So that's much more than a cheap relay for 15. And as well, this drives the increase of revenue.
So for your non-B2B customers, just your B2C customers, what's the average number of devices that are usually in each one of their homes?
That's interesting. So we have, of course, we know this per customer. The average is a customer adds in the first year of using Shelly 2 devices, not more. And then the average adds 2 devices per year, which is as well interesting and not recurring revenue, but it's repeating revenue. And that's as well different to a couple of our competitors, because there are competitors that are very limited in their product range. They just have thermostats, for example. So you once equip your apartment with thermostats, you're done. So we have new products every couple of months. This year we launched 30 new products. We have motion controllers. We have different styles of relays for different use types, like LCD to change the colors, dimmers. We have 1 or 2 channel relays. We have relays for opening and closing the blinds, because you need different functionality there. We have a huge range now of plug-and-play devices. We have even add-ons that you can use to measure temperature. You can steer your heat pump. You can steer your water heater. You can combine it. You can use it for steering your irrigation system, your swimming pool. So that's kind of if you want a small version of a drug. So you start with the first one, and then you add 2 and 2 and 2 and 2. The heavy users have like 200 or 300. So our top 1,000 customers, I think, have like a couple of hundred.
Absolutely. So just to give everyone the full picture of the ecosystem, right? So that it's extremely clear. So you have your Shelly device that you can have your baseline one that controls the locks, the other thing, and there's other devices that Shelly Group sells that can do other functionalities within the home, and you use the app to make sure that all those devices are either talking to each other or you just go through the app to adjust whatever it is for that individual device. Just yes?
Yes.
Okay.
Yes.
Perfect. All right. So then, speaking to the company, I mean, again, during that presentation, I think for the first half of 2023, I have the slide right here. The company did about 28 million. That's in euros, right? Euros. So it did 28 million euros. You're guiding for the full year of 2023, 72 million. And like we said, the first product of the Shelly suite, the smart home tech, was sold in 2018. So tell us a little bit about the demand and the growth from 0 in 2018 to now guiding to 72 million by the end of 2023. That's a short 5 years. Like, tell us, what was really driving the demand just for the smart home technology? I get it. The geeks fell in love, and then it exploded a little bit from there. But there must be more to that story.
Yeah, it's of course the number of products, because in 2018 it was just a Shelly one relay, on and off, so super flexible that you can use it for a huge number of use cases. Then we had like the 2-channel, the relay. Then we have products that work without neutral, that are needed in some regions because there is no neutral, so just a power line. Then we started with plug and play. At the beginning, plug and play was not that successful. Now it's really taking off. We added the professional line. That is that product that you put in your central distribution box where you have the breakers. So a huge range of products. And then starting from Germany, Austria, Switzerland, Spain, Italy, Portugal are quite strong now. Now we start in France with a very good success at the beginning. So small level, but very, very high growth rates. In Nordics, we are doubling our revenue on a small level still, but doubling. We just started in the UK. We are on a very small level. We onboarded last year as a vendor. Until then, we had some partners having a seller account on Amazon. So now we are a vendor on Amazon. We are one of the fastest growing brands they ever had on Amazon. We had in Europe, we had on the last Prime Day, one of our products was the most sold item on Amazon in Europe in the whole do-it-yourself category. So that shows that the demand is great. And all this helps, of course. If you go to Amazon and you look for reviews about Shelly, there are a huge number of reviews, and all of them are really good. And this is a driver. Then over time, you have more and more channels that are coming. So if if it was a lot of Amazon business and online business, now in Germany, Austria, in France and Spain, we are close to sign with the big do-it-yourself chains, like Hornbach in Germany, Bauhaus, or Leroy Merlin in Spain and in France. In France, we are now on Manu Manu, which is a very big online do-it-yourself retailer. So it's more and more demand is coming from the market to us. And now what's happening in a lot of countries is that the wholesalers address us. So now we go there, they come to us and say, can we sell Shellys? That's the guys that sell to the installers, because they know that a lot of the installers buy our products on Amazon. So that's just the guys that know their way around with smart home and not a typical old-fashioned electrician. Yeah, so that's step by step things are coming. We get more exposed to the market, of course, as well, because of our stock market activities in Germany and Western Europe. We signed a partnership with the Chinese balcony power photovoltaic system. So that's very popular in Western Europe. And again, the energy prices are high. So you put, if you don't want to put a huge photovoltaic system on your roof of your house, or you just have an apartment, you can have 1 or 2 panels that you put there on the balcony. They have battery storage for that, and they use our devices to monitor the energy flow. Mm-hmm. So we signed an agreement with them because now it's an external product we want to integrate in their solution. This is something we communicated at IFA, and since then I think we have demand from 10 or 15 other companies saying, hey, why are you doing this with Changer? Do this with us, or do as well with us. We are much bigger than they. We sell much more. We have a demand from Huawei now. So there are a lot of things in this direction coming because people see our products. And a funny thing is this Vodafone deal I was talking about. You know how this happened. There was the Vodafone engineers were sitting together and said, we have a problem. And one of the guys is a Shelly fan. And he said, oh, let's ask Shelly. I mean, they have a product that is close to what we need. They asked us and they said, can you change the product a little bit? Because we don't want to have it just with Wi-Fi. We want to have it with Wi-Fi and with LAN. And we said, okay, we can do that. It took us 6 months. We have a new product. And they are super happy with this device, which is today one of our number one revenue bringers, not in quantities, but revenue-wise, because it's quite expensive. So this is how a lot of things happen. By the way, we announced at beginning of October that we sold our 10 millionth Shelly device. So it's going really like this. Wow.
I mean, you know, it also speaks, it's just so interesting how that you guys went the DIY route, because it almost, I mean, was there kind of a COVID bump a little bit for you guys and tailwind? Because like, I feel like, just speaking from personal anecdotal experience, you know, once you're at home by yourself, you know, not by yourself, I have my family, but like once you're at home, like there becomes a lot of projects that you have to do by yourself and you got to figure it out and everything like that. And you guys kind of positioned yourself as like, this is your DIY smart home device, you know, for you to figure it all out yourself. I mean, was there kind of a COVID boost from folks being like, all right, I got to figure this out myself because an electrician's not coming over?
Actually, I cannot say that. Because we were growing continuously over 50%. Yeah. 70% CAGR in the last years, and now it's slowing down a little bit just because the basis is bigger. So we could say, yes, we had a very good year during COVID, but there's as well a negative effect because a lot of other channels were closed or we couldn't continue developing them. So there's definitely a positive effect from COVID. There might be as well a negative effect, and in total, it's a wash. But
I was just curious.
Yeah, it's a lot of our competitors that were only in the professional channels, in the physical stores, in the installers, and the installers didn't make the installations because they were closed. They suffered a lot. Right. And if their products are not available, and people come to our products because they are available and you can get them. And we had enough stock. That was as well good. We had no problem with supply chains because we early enough decided to have relatively high stocks in Europe. So we had no problem if China was closed for 4 weeks. The factories were closed. We said, okay, then we have enough stock, and then stock is coming again. So all this was managed in a good way.
Absolutely. By the way, my father's name is Shelly, and your company just became his favorite company of all time. Especially when I tell him like, oh, you have a big fan group out there. There's the Shelly groups on 2 million social reach. Like, he's going nuts. He can't wait. He can't believe it. All jokes aside, let's talk also a little bit about your customer base by geography. You mentioned a number of countries that have Shellys that are actively using it. I think primarily the main two, from my understanding, are where most of the revenues come from is Germany and Bulgaria as well. Correct me if I'm wrong.
No, Bulgaria is very small.
Very small. Okay, so it's Germany.
The biggest region is Germany, Austria, Switzerland. So the German-speaking area. That's the DACH region that we are reporting in these regions. And DACH is accounting for 45% roughly of revenue.
Got it.
So then we have Southern Europe, Italy, Spain, Portugal, and France. But France with still relatively small revenue, but this year like ×5 versus last year. So it's really coming. Southern Europe quite strong, Northern Europe quite strong. So all the Scandinavian countries. In the UK, we are at the very beginning. We just hired a salesperson there, but we see the first effects coming, as in France. We are as well in North America and in South America. We have a subsidiary in Florida and one in Vegas. Seriously, I'm not happy with the development, and I think one of the mistakes we made there was going too much directly to the professional market, because that's a bigger market. Of course, it's bigger than the installers. They are installing much more. But what we see in Europe is that this do-it-yourself first was perfect for us, because now the demand is coming from the professionals. But going to a professional, the first question they ask you is like, how much margin do I have? And then they are used to huge margins from other manufacturers. And we said, no, we can't give you that much margin because our products are cheap. Yeah, the products are too cheap anyhow. You have to make them more expensive. No, we are a do-it-yourself company. And we have a professional line that is more expensive by definition. You can take that if you want. But, that takes really long. Even in Europe, even in Germany, where we are very well known now, these channels, the electricians, the wholesalers serving them, they have decision cycles or times like ages. So last week we had a call with one of the guys that said, we want to work with you. And what do you think? And we made a presentation. And then at the end of the call, they said, now we have to think about, and we will have some internal discussions. Let's plan the follow-up meeting. Okay. When we have the follow-up meeting?
What, 2 months?
February. In February. Come on. I mean, you discuss something like this with Amazon, it's going like this. That's so do it yourself first is right. We are now changing that in the US. We are going more in do it yourself. We are on Amazon. We have our own web shop. We are listed in the web shop of Home Depot, but it's just at the very beginning. But this is kind of the direction we will take now. And I think this will be maybe not as in Europe, but will be a good success. And there's no reason why it should not work.
Absolutely. So let's speak a little bit more to the push in North America as well, because most of my audience is North American and just wanting to better understand, the marketing push. So what else are you doing aside from word of mouth, utilizing the social communities in order to push the Shelly Group of products to the DIY community in North America?
So what we are working a lot with influencers. So tech influencers that are using our products. We have 2 or 3 in the United States, but we need more, and we will invest more. And of course, beside the unpaid reach that we have on Facebook and on other platforms, we start now to invest some marketing money in Google and in Facebook and in other channels, and that works quite well. So first we bring them to our website, and then they buy the product, or they buy it on Amazon. We don't care where they actually buy. We are at trade shows at CES, so we will have a nice booth at CES. We had one last year. We are at CEDIA is more for the electronics specialists, so the professionals. We have been there a couple of months ago. So that's kind of the things that we are doing. But I think our main push will come via online, because that's an online product. If you go to a Best Buy store or you go to a Home Depot store, yes, they have something, but our typical product is bought in online channels, and that's Amazon is the machine. I've seen a couple of studies how big Amazon is in this category of products. It's amazing. And I've seen a study from McKinsey asking people, where do you look for smart home products? And they say, of course, in Best Buy and in Home Depot. And where do you buy your smart home products? On Amazon. So that's a machine. And in North America, of course, you know that.
Very good. All right. So I think we've covered pretty much everything, everything having to do with business, marketing, growth opportunity, all that stuff. So now that we've kind of covered all that and people have a better picture of, the Shelly Group product suite, all that kind of stuff, this is a question I ask everybody on here, but what would you say from the investor perspective that folks still get most confused about when thinking about Shelly Group? Maybe we can answer a few of those frequently asked questions here.
Yeah. So especially from a Western European point of view, we are a company with the headquarters in Bulgaria. We have a subsidiary in Germany. So I'm usually in Sofia or in Munich. But for a Western European investor, German investor, they see us as a Bulgarian company. And then they start saying, is everything correct? What about bribing? What about, are you accounting in the right way? And then if I say, guys, we have Deloitte as a auditor, so of course we are accounting right. I'm sure that if we move and we actually discussed it, if we would move just the holding, so the official headquarters to Germany, our share price would automatically go up by 30-40%. And when I discussed this with Western European shareholders, and I said, guys, are you completely crazy? So what would this mean? 5 people will work in Munich. I mean, today 10 people work in Munich. I bring over 5 more, and then we are a German company or what? I mean, the people stay in Sofia because a lot of German companies are outsourcing to Bulgaria because labor is much cheaper. The quality of the engineers is really, really good and cheap. So software, hardware engineers, we have 50% of our people here are working in development, software and hardware. Everything is done in-house here in Sofia. And of course, I have accounting here. I would not bring accounting to Germany. And people in Germany earn 4 times as much or cost 4 times as much. That's completely crazy. But this is like, so a second thing is we are listed in Frankfurt and in Sofia. And in Frankfurt, there are 2 different trade places. One is the old-fashioned Frankfurt Stock Exchange. That's where we are. And the second is Xetra. Xetra is the digital place. And right now, there is not a single Bulgarian company listed on Xetra. So I'm fighting with Frankfurt Stock Exchange to be listed on Xetra because Xetra listing has a lot of advantages. It usually brings the trading volume automatically up. Just to give you an example, what happens at the level where we are right now, you see only the best offer on the selling and on the buying side. Only one, only the best. So if there is someone who wants to sell 50 shares, you see 50 shares are available. And on the other side, you see someone who wants to buy 30 shares. You say, come on, this is not traded. This is nothing. If you want to buy shares and you put the order there are others behind that want to sell. So the volume is there. It's not visible. And that makes a lot of people afraid and not even putting their demand or their offer on the market. And this will change with Xetra because you see the depth of the order book. And that's a change. Moving to Germany, the holding to Germany would have this very positive effect on the market cap, has a negative effect on the tax. In Bulgaria, we pay 10% taxes. In Germany, we would pay 30 to 35, which is a difference. And still, some German investors say, why don't you go to Germany? We would feel much, much better. But we are doing a lot of things. We are more transparent. We started only 1.5 years ago having quarterly earning calls, going to investors conferences, being more transparent. Until end of 21, we only published our numbers when we had to. And we were not active on the market. And that's what we are much more active now. We are publishing news and all this helps
talking to me
and shows very good effects. We will continue doing that. And then if one day we move to Germany, I cannot say. It has so many negative effects that maybe I would not do it. But one small thing as well, we are a public listed company under Bulgarian law, which means that an AD is the official abbreviation. We will change this next year. Because then we are allowed in Europe to move into a structure that's called SE. That's a European public listed company under European law. And that's something that Western European investors understand much better. There is, for us, legally, no change. It's even easier because we are obliged to follow much more and stricter rules here than once we are an SE. But as well, this would lead to a better visibility and better acceptance. Because investors say in SE, I understand my rights. In AD, I have no idea what this is. So that's kind of some of the things that are, and this in combination, what I said at the very beginning, with our numbers. You know, you explain the numbers: 90% equity ratio, 25% EBIT margin, 50% growth, enough money to finance growth, and then they say something must be wrong. Come on,
right? And then they're like, "Oh, Bulgaria, like Sofia, like, okay, like, well, exactly. For sure, we'll see." So all right, I see that. I mean, that's from Western. That's some of the feedback you get from Western European, either current investors or potential investors. You know, listen. You're just in Chicago. You're now doing this interview with me. You know, talking to mostly North American investors. I mean, have the conversations come up about potential cross listing or doing all that? Because I'm sure you've gotten a few questions like, "Hey, do you have an OTC at a minimum listing or something like that?"
Yeah. Yes, there is. I mean, what I see is that it is changing. Mm-hmm. It changed already a lot because, of course, if someone invests in a company in an insignificant amount, I mean, I'm not talking about to buy 100 shares or 1,000 shares, and we have a couple of smaller investors that are investing 500,000, 1 million in the last 12 months, and of course they want to see you a couple of times. And that's a lot of family offices as well, smaller investors. And they want to be sure. And a couple of them, and especially some of them from Germany or Austria, that I have met now 6, 7, 8 times, that starts to be a real close relation. And they know that they can call whenever they want. We are still a small company. They can talk to the CEO. Every week, I have 2, 3 calls like this with potential investors that say, I will check and let's wait another quarter. So it will come. That is clear. But I mean, the bit strange question, that's what I said about Bulgaria. And then what is the risk with China? Our production is in China. What is the risk with China? So my answer is simple. We have 5 months of stock here in Sofia. So if something happens, first of all, I'm not dead from one day to another. Second, everyone would have a huge problem because all the spare parts are coming from there. Whatever you buy, car industry would have huge issues. Production-wise, we have a plan, and we can realize that very fast, like 2 months, to have a factory in Vietnam. We even have possibilities to produce here in Bulgaria, not as cheap as in China, but we can produce here. We have access to facilities in Italy that we use for different projects. Very small volume. We have something in Poland that we could use. So that's something that we can handle, and we are aware that there's a risk, and we have a plan B. One more issue is so they always ask, are we able to finance our growth without making a capital increase? Yes, we can. So I know that until end of next year, we are absolutely safe with our financial planning. And assuming that we will continue being profitable, we will as well be safe beyond. So capital increase is not an option right now. It would be an option if there is an opportunity for a very good acquisition. So just as an example, nothing in the pipeline, but just for thinking, if we find a good company in the United States that perfectly fits to us, that has access to the market, to the channels that we do not have the right access, that makes a reasonable revenue and has a good existing management, I would not buy a problem in the United States, because we have leads to the next challenge, it's a management capacity issue. If you grow 50%, we have doubled our headcount in the last year. We will not double the headcount again, so we invested a lot in structures. We will increase headcount like 30% if we grow 50% in revenue. But onboarding the people, taking care for the people, getting 1 or 2 more people in the top management that are able to steer something without asking the CEO all the time. So that's kind of the challenges that we have. But so far, we are on a good way.
Absolutely. And literally you answered pretty much my next question, which was, in your opinion, what do you consider downside risks to the business? I mean, just going from some of what I've seen online and some of the write-ups on Shelly Group, I maybe you can address this a little bit too, is on like product risk as well as technology obsolescence risk, right? I mean, there's always a challenge there too. Like if somebody comes in and just
of course. I mean, if you look to the European economy, especially the German economy, is not very strong right now. Now Germany is our biggest country. That's a potential downside. On the other hand, and as well, war in Ukraine, the high energy prices, this is not very good for the consumption climate. On the other hand, the high energy prices drive our sales because we have very reasonable prices for our products, and most of our products are giving you real-time data about your energy consumption. So that's the opposite side. So now in general, the smart home market is expected to grow 20% year over year. I would say there's no good data. So if you ask the typical market research companies, there's no good data. If you ask me now, is the market growing 20% this year? I only can give you my gut feeling. No, it's not. No, it's not. We are growing 50%, 49% in the first 9 months versus last year. So we published a preliminary revenue after end of September, after 9 months. We are growing 50%. I know from competitors that they are flat. They are not growing at all. So we are grabbing market share. That's a positive thing. On the technology side, there is a standard coming that is called Matter. Matter is the alliance of Amazon, Samsung, Apple, and a couple of other big ones, Google. And Matter is potentially a risk because Matter is kind of aligning all standards. So that's what is one of our benefits that we work with so much platforms is standard. Every product has that. On the other hand, Matter is far away from being more than just an inclusion. So it's easy to include a Meta product in your environment. But if you want to do something with it, you have to go back to the original app and make your settings. And we know from the big players that I just mentioned that energy consumption, energy monitoring will not be possible with Meta in the next 3 to 5 years. We have a huge number of features that have nothing to do with Matter. Like every product is a Wi-Fi repeater. So you put one of these relays in the wall and it's a Wi-Fi repeater. It's as well a Bluetooth gateway. We have plug and play devices that work in Bluetooth, which has an advantage to have a very long battery lifetime. And they connect to the existing Shellys in your home. I already said that you can change the firmware with a library. Our products will be Meta compatible in the next generation, and the old ones will be made backwards compatible. Now we have a new chip that has much more, that's made for us from a Chinese chip manufacturer, but it's tailor-made for us. That's faster, that has much more capacity, so that much more of our features can fit in the same device. So we will even enlarge the number of features. Now I talked to Dimitar, who was one of the founders and the technical head, and he asked already, Espressif is the chip manufacturer. He asked them for a new chip, and they confirmed. I mean, the new one is just there, and we will double the capacity of the next chip, which will be there in a couple of months, because Dimitar said the chip is already full. With everything we have in the pipeline, the feature-wise, the new chip is already full. I need more capacity on the chip. Given our high quantities of chips that we buy now, we have even lower prices for the new chips. So all this is is playing in our favor, and that's something that is really good. One feature that is important for a lot of people is our products work completely without cloud if you want. So if you say, I don't want to have my data in whoever operates the cloud, I don't want that, you can operate them locally at home in your house, in your environment. So that's just a couple of features. And one important thing I think as well for US customers is we are a European company. We fulfill the very strict European data protection guidelines. Our cloud is in Frankfurt and in Brussels. So not somewhere in a strange country, whereas you buy a lot of cheap Chinese products and the cloud lies in China or in US, but has a connection to China. So you share your data with Chinese companies. Okay, I mean a lot of Europeans don't like that, and that's another benefit for us. So there are a lot of things that are in favor, and I think there is nothing that I could think about where we do not have a plan B.
All right. So you know what? I think, Wolfgang, I think you pretty much answered all my questions. I mean, I think I want to close out with same question that I close out with everyone on here. And, you know, in your presentation in Chicago, you gave, your goals or guidance for the next 3 years, where you have a revenue target by the end of 2026 to be approximately 200 million with a year-over-year growth of 320% versus 2022.
Not over year. Yeah, exactly. Over the period.
Yeah. And then, the EBITDA margin or CAGR at approximately 48.1%. So you want it to get up to approximately 50 million by the end of 2026 with an EBITDA margin of approximately 25%. So these are
a small mistake.
Yeah.
Not an EBITDA margin.
EBIT. I'm sorry, EBIT. My apologies.
No, that's one of that as well. Something that is different. I would never talk about EBITDA because there are so many companies say, "Oh, we have a great EBITDA, but EBIT is negative." So if we stop investing, then we are positive. Fine, okay, great. We are in our difference between EBITDA and EBIT is not very big because we are very asset light. We are accounting very conservative, so we are not activating a lot. So all this is our balance sheet is really rock solid, and without telling you secrets as well. This year we make whatever we can write off, we write off because we have a very good business.
All right. So with these goals in mind, in your opinion, what are some of the inflection points or what are some of the goalposts that folks can better understand that are like, okay, I guess they're on their way to hitting some of these goals that they're setting for themselves?
Yeah. So there is behind these targets, like we want to do plus 200 million and we want to do plus 25% EBIT margin, and that means 50 million EBIT, and that's an average growth of 40 something percent. Of course, the internal targets are higher, have to. So where should this come from? And in the presentation behind these 200 million, I talked about how should this happen, and one thing is regional expansion. So Germany is strong, but Germany is still growing very fast and will continue growing very fast. Other countries that I mentioned already, Southern Europe, France, are having a nice development, but we can do more, and we are hiring local people to make that happen. UK, we are at the very beginning. Nordics is good, but as well at the very beginning. So the market potential, regional expansion-wise, is very big. United States, if we fix the United States, there is no reason why the US business should not be maybe not on the same size as Europe for us, but as the same size as Germany, which is much smaller than the huge continent. So that's the regional part. Then we have more products. We have more plug-and-play products. Was never our strength. Now plug-and-play is selling really good because we have really good products. With this smart plug, with the window sensors, with motion sensors that are cheap, solid, Bluetooth, very long battery lifetime. So that's all arguments. And we have a huge number of products in the pipeline, so that there will be more products coming. We are thinking about going into the security market. There are a lot of we bought a company beginning of this year, very small company on a different standard. That's the Z-Wave standard, Z-Wave. the oldest smart home standard in the world. There are millions of households out there that use this standard, and security companies use that standard a lot. Alarm.com and others are using this standard. So they can connect, and our cloud is very open for them. So we have an API connection. They can integrate easily the Z-Wave products then into their environment and sell much more than just security. They can make everything smart. So that's the source of revenue, having more products. Then we have this recurring revenue that we just started with the premium app that is adding value. We have a new business model that can be, if this really works, can be a complete game changer for us. That is what we call the module business. So the Shelly solution is on a chip and on a module. And this module is built in our devices. So now we are having the first contacts to companies that want to buy our module and integrate it in their device to make them smart. This can be something for washing machines, coffee makers, dishwashers, water heaters, other heating systems, heat pumps, solar panels. We talked about that. So that's a completely new business model for us. And we've hired a person that's coming from the chip business. We have the first 4 contacts to potential trial partners, big ones. And all this is delivering at the end for the 200 million. And what I said as well in Chicago is, I'm sure that not all of the things that I just mentioned will work. So maybe we will completely fail in the United States. Okay, we will still make 200. Maybe our premium app will not work. We will not get recurring revenues. Okay, we will still make 200. If nothing works from the things that I just mentioned, then 200 will be tough. Then maybe it will be only 150, but it's not very likely that nothing is working because we see that things are working. If everything is working, 200 will not be enough. We will make much more. So that's kind of the 200 are, I feel, on the relatively comfortable side.
So Wolfgang, I think that's a great place to end it. With that, where can our audience go and find more information about Shelly Group?
Yeah, of course, on our product website, Shelly.com. And on the product, so you see everything about the product. We have a special website for the United States as well with US products, special products for the US. And there is, of course, an investors relation part of it. That is still, we didn't talk about the renaming. So right now, at this moment, the website is still called Alterco, our investors relation website. It will be in the next couple of weeks, it will move to Shelly investors relation website. It's just because we renamed the company from the old telco world. It was named Alterco to Shelly a couple of months ago, and still the website is in the old design, and we are making it completely new. And this will be live in the next couple of days.
Come on, get the tech team on it. You're a tech company. Come on, let's get them moving here.
Yeah, but if you go around here in the offices, you see that the people have eyes like this, like everyone is looking at the limit. And I think it's much more important that our consumer website is on the point for Black Friday. That is more important than the other stuff.
100%. Very cool. Well, Wolfgang, thank you so much for joining me. Really do appreciate it. Good luck. Stay safe. And I look forward to our next update.
Great. Thank you very much.
Thank you. This podcast is for informational purposes only and is not provided as financial, legal, or any other advice. The information is not investment advice or an offer to buy or sell any securities or make any investment. The views expressed by guest speakers are their own, and any reference to third-party products, services, or information does not constitute an endorsement thereof by SNN or its affiliates. SNN expressly disclaims all liability for any individual's use of the information presented in this podcast.